Income tax 2020 tax software example. Filing status. Come in, relax with income tax 2020. Here we are in the Lacerte tax software. You don't need the Lacerte tax software in order to follow along. Our objective here is to be jumping back and forth from the data input to the Form 1040 so we can see where the filing status will be when we change the filing statuses and what the impact of those changes will be on the tax return. So we're going to follow our tradition here of going back and forth from the tax return, looking at it in terms of the actual forms, looking at it from the data input perspective, and we'll also take a look at it with the equation, the tax equation here. So when you think about these different filing statuses, you kind of have the equation in your mind as to what the impact will be on the tax equation. So we're starting off with a single filing status that for Eric Smith, our tax filer here. Let's just go down and see what we have. We're going to say that the W-2 wages is all we have, so all we did was enter wages for the 100,000. Wages for 100,000, all we have. And then we're going to say that they're going to take the standard deduction. Now here's one of the big impact points here, the standard deduction, because the filing status for the standard deduction, as we can see here, is that 12,400, whereas if married, it would be the 24,800, head of household 18,650. So if we follow that along in our Excel worksheet, I'm going to go into the worksheet here and say we have 100,000 on wages, and that's going to flow through, and then we're not going to itemize here. We're just taking the standard deduction. Standard deductions are being taken down below where we have that same kind of table. So this is pulling the 12,400 for single. That should get us down to the taxable income of that 87,600. 87,600. So that is that. I'll put a check mark by that. Then we're going to go to page 2, tax calculation 15,110. So tax calculation over here, then we're going to say 15,110. So back on over 15,110, and that's going to be our calculation. Now, if I was to see that in like a summary type of format, we could see the summary format. Kind of pick that up here, more of an equation, more of like an income tax equation. 100,000, we're taking the 12,400 standard deduction. That gets us to the taxable income 87,600, tax before credits 15,110, and we're not getting into the rest of it with credits and payments at this point in time. We're basically stopping at that point with the tax calculation. Now, if we consider our rates over here, the calculation, we're on the single status. So here would be like our tables. And if I go back in here, the marginal rate is 24% because we're at the 87,600. If we go into here, 87,600 at the top rate, then the marginal rate at that 24%, the average rate that we're having now is going to be that 17.2. So now I'm going to go in and say, let's record this as a static amount on my Excel sheet. I'm going to put the 100,000 here. I'm just going to put this on the outside so we can record it basically here. And I'm going to say this minus this. And then I'm going to say the tax was the 15,110. And this was for single, I'll say up top, just so I can put that. And then I'm going to go to married filing joint, and we'll use that same 100,000 and do the calculation there as well. So let's do that. We're going to go back on over, and I'm going to say, okay, now they're married. So let's go to the client information, and I'm going to say now married filing status, and we have Eric and Jane. And so then we're going to go back on over and say, okay, let's see what that does. So Eric and Jane, and so now we're on the married filing status up top, of course. So now this filing status has changed. I'll put a check mark at the filing status if they let me. Check mark. And then Eric Smith and Jane, of course, we have two people on the top of the tax return at this point in time now. And if we scroll down, we have the same 100,000. So now we have two people combined together earning the 100,000. Whereas if it was one single tax return, then of course we would have one individual. So you would expect then the types of changes you would expect is the standard deduction should go up, right? If I have the same 100,000 for two people on the same tax return now, you would think this item, the 24,800, has now changed. So now we've got the standard deduction. We're not thinking about itemized deductions right now, just standard deduction went up to 24,800 because married. So notice married You can think of it as a better filing status because, of course, you're going to have a higher standard deduction and the tax tables will be beneficiary. However, it's also kind of more complicated than that because obviously, if you get married, you have two people that are now on one tax return. So if they both had incomes, then your income is going to be doubled as well. But the tax code, when it was used to be based on the idea of a one income household, and then it's been modified in order to see to it that when people get married, the goal is that it's not going to be a detriment to getting married. So now it's often the case where you have two income households, and when you get married, it shouldn't be a tax burden to get married. So you would think then what would happen is these things would basically double, right? So we got the standard deduction has now doubled. So now we're at the $75,200. If I bring that over to our Excel worksheet, all I'm going to change here is the standard deduction. Say we got the 100,000 still, standard deduction change. That's going to give us the taxable income, 75,200. Then if I go back on over and I say, okay, well, what does that do then to the tax calculation? Now we're at the 8,632. So 8,632, 8,632. You can see that's, substantially different, obviously, than the single filing status. But again, that would kind of make sense given the fact that you could quite possibly have double the income, given the fact that you're talking about two taxpayers at this point. So then if we go to the tax summary, we're going to say, all right, well, what's the marginal rates? Notice they're a whole lot lower now in terms of the rates. So the effective rate, 11.5, marginal rate, the 12%. If I look at the trustee tables here, now we're in this column, and we're saying that we were at the 75, was it? Taxable 75,200, so 75,200 lies here. So that's the 12%, right? We're in the 12%. So large difference in the tables, of course, and the standard deduction that will impact the tax return there. Let's go back to the Excel worksheet. I'll just log this in. 100,000. This is now at the 24,800, and then this was at the 75,200, and this is going to be the 8,632. So there's the difference with the same 100,000. Let's try head of household. Head of household. Going back on over and say, all right, let's go to the head of household and see what happens with it. So I'm going to go back on over and we're going to say, they got married or they got divorced here. Let's just say they never got married. They decided not to instead of getting a divorce here. We'll just go back to head of household. And then you typically need a dependent for a head of household, usually. So I'm going to go okay, now we need a dependent. We're going to go to the clients tab. We're going to go to the dependent here. And so now we're going to add a dependent. So I'm just going to say Tom Smith. We're going to give him the date of birth here, Social Security. We're going to say the relationship's a son. We're going to say that Tom lives with the taxpayer of 12 months. Child living with the taxpayer, and then the earned income credit, child tax credit. We're not focusing in on these, so I'm not going to get into a lot of detail. We'll talk about those credits at a future presentation. So we're kind of focusing in, getting down to the income tax calculation here. So let's just concentrate there at this point when we get into the dependents. So now we're over here at head of household. So now we're at the head of household filing status up top. And then if we scroll on down, we're going to say, okay, so now we've got a dependent here, and that's helping to possibly qualify for the head of household. So now we've got the 100,000 once again, and so now of course the standard deduction has now changed. So standard deduction now at the 18,650, as it says basically in the instructions over here. So then if I go back on over and I'm going to say, okay, so now let's take a look at that. We're at the tax 18,650. So I'm going to say this is going to be equal to the head of household filing status 18,650, and then we're going to go back on over and say that this is 18,650. So 18650. So same 100,000 now, head of household. Now we're bottom line here 18,650. Although again, we have some more detail now, given the child could potentially result in other benefits such as the child tax credit. So I'm not concentrating here on the child tax credit. We'll talk more about those things later. We're just basically getting down to the tax and looking at the impact of the filing statuses. But when you get into dependents, one of the issues with the dependent is, well, they could qualify someone for credits like an earned income credit, or could have a benefit on child tax credit and could have a benefit on earned income credit, and they also could help someone to qualify for head of household filing status. So when you have a divorce situation or joint custody situation, then those are issues that will come up. So that is that. Okay, so then if we go back on over, I'm going to say, all right, so that's the head of household. So we'll get back into the standard deduction as well later. So there could be a couple other things that could impact basically the standard deduction, but again, we're focusing here simply on the filing statuses themselves rather than other things. Okay, so now we got the head of household. Let's put that. That's going to be the 100,000. 100,000. Why is this giving me a percentage over here? I don't want a percent. This is going to be the 100,000, and this is at the 18650, and then we had the taxable income 81,350, and then the 18650, and this is 100,000. 100,000. So then we could say qualified widow is the other one that we had here. So we could put the qualified widower. So here we have that, and then we usually still have a dependent involved in that case then. So remember, this would be if in the year of death, if a spouse died in 2020 in this case, then you would typically still be married filing joint usually, and then in the 2 years following, maybe qualified widower, or single, depending on one of the components being, is there going to be a dependent involved? So we're going to say, okay, qualified widower status here. What happens? 100,000, same 100,000. Now we're back to the 24,800. So we're at the 24,800, basically standard deduction as if married still. And so we're going to say, all right, so going to say this is going to be equal to the 24,800, and then we are at the 75.2 for the income tax. So income tax is going to be the 75.2 here, and that looks good. And then I'm going to go to page 2, and that's going to be the tax of 8,632. So we've got the tax of 8,632. Looks much like what we had over here for the married filing joint. But now, of course, if there were a qualified widow or widower, we might have a child tax or a dependent credit as well. We're not going to get into that at this point in time. So we're focusing in on the impact of simply the status at this point in time. So if I go back up top and if we look at the tax summary, then here's the information for the tax summary. So I'm going to go back up top. So here's kind of the comparison to what we had if we had the 100,000 for single statuses. You could see the changes in the standard deduction, married filing joint head of household for that same 100,000, and here's the qualified widow or widower. And then we have the taxable income, which of course will change given the fact that the deduction changes. This is like the net income on the tax return, kind of like the bottom line net income. And then this change here, of course, will have an impact on the tax, even if we were using a flat rate, a flat tax, one rate. But we're not using one rate, we're using progressive tax tables, which will also have an impact then on the tax calculation. So then the bottom line tax calculation then, here it is single, married filing joint, and head of household, as well as qualified widow and widower.